If you've ever felt overwhelmed by all the acronyms we use in disability and public benefits planning, you're not alone. SSI, SNT, SGA, IHSS. It can feel like alphabet soup. But in this video, I'll walk you through the most important terms and programs you need to know if you or a loved one is navigating public benefits or special needs planning. I'll explain each one clearly and without all the legal jargon, so you can finally feel confident understanding what it all means. Okay, so here is a list of all the words and acronyms I'm going to explain, and I'll go alphabetically. So if you want to fast forward to the word that you're wondering about, you can do so. I won't be hurt. Right, so let's start out with A&A. This stands for aid and attendance. This is an income stream for veterans that provides in-home assistance for veterans who need help with their ADLs. I'm going to explain an ADL in just a second. But next we have ABLE accounts. This stands for Achieving a Better Life Experience. This is a savings account for a disabled person that doesn't interfere with their public benefits. You can put the gift tax amount into the ABLE account, this year $19,000, and you can take money out for qualified disability expenses and not have to pay any capital gains tax. It's pretty cool. Next is ACA. This stands for the Affordable Care Act. This is a market for health insurance where individuals can purchase their own health insurance even if they're not employed. If your income is between 100% and 400% of the federal poverty level, you can qualify for subsidies to purchase health insurance. All right, now we're at ADLs. This stands for Activities of Daily Living. This is a way to measure if somebody can take care of themselves. These are the main activities considered as ADLs: bathing and showering, dressing, eating, transferring, and continence. These activities are tested to see if someone qualifies for services like IHSS or nursing home care. Next one is CDB. This is Child Disability Benefit. This is an income stream for a disabled child of a parent who's receiving a Social Security income stream when they retire. If the child became disabled before age 22, they can get half of whatever the parent is receiving with their Social Security check. And once the parent passes away, the child can get 3/4 of whatever the parent was receiving. This is run by SSA and it's under the SSDI umbrella. Next is FPL. This stands for Federal Poverty Level. This number is used to set income limits for public benefits. In 2025, the FPL for an individual was $15,650 per year. For Medi-Cal eligibility, for example, you can have an income of up to 138% of the FPL, which is just under $1,800 a month. And to qualify for SNAP assistance, your income must be at or below 130% of the FPL. Next is a first-party special needs trust. This is a trust where a disabled individual puts their own money into the trust, and then they can qualify for public benefits. Only the beneficiary themselves, their parent, their grandparent, or the court can set up this trust. When the beneficiary dies, though, Medi-Cal can bring a reimbursement claim against any money remaining in this trust. Next is IHSS. This stands for In-Home Supportive Services. This is where caregivers in California are paid to help a disabled person at home with their activities of daily living, or their ADLs. The caregiver can be a parent or other family member, and they're provided a certain number of hours of care. The eligibility requirements for IHSS are the same as those for Medi-Cal, and this program is run by Medi-Cal. Next is ISM, In-Kind Support and Maintenance. So when you're receiving SSI benefits, that's only supposed to pay for your shelter. So they say, the government says, that if somebody else is paying for your shelter expenses, you don't need all that money, which SSI in California, it pays up to about $1,200 a month. So they're going to reduce the money that you get from SSI by about 1/3. All right, so your $1,200 a month payment goes down to about $850 a month. That's the ISM, In-Kind Support and Maintenance reduction from your SSI check. Next is LTC, Long-Term Care. This is where someone might need supportive care in order to maintain their quality of life and be as independent as possible. This type of care usually refers to elderly people or people with disabilities. The person receiving care usually needs help with their ADLs. This can be provided at home, in an assisted living facility, at a skilled nursing facility, many different places.
Did you know my mom has a monthly newsletter where she shares helpful information? Click below to join.
Next is Medi-Cal. This is a health insurance program in California that's part of the federal Medicaid system. Medi-Cal provides free to low-cost health coverage to low-income and disabled individuals. To qualify for Medi-Cal, starting in 2026, a disabled person can only have up to $130,000 of assets, and they can have just under $1,800 a month of earned and unearned income. Medi-Cal is just in California. Other states call it Medicaid. Okay, now we're going to Medicare. This is a federal health insurance program designed for people age 65 and up or certain people with disabilities. Also, you can qualify for Medicare if you have end-stage renal disease. There are 4 parts to Medicare, and you need to pay a premium for your coverage. Now we have Medi-Medi. This is our affectionate term for a disabled person in California who receives both Medi-Cal and Medicare benefits. Nationally, this is generally called dual eligible. All right, now let's talk about SGA, substantial gainful activity. This is a measurement that the Social Security Administration uses to determine eligibility for SSI and SSDI benefits. If someone earns more than the SGA level, they won't qualify for SSI or SSDI. In 2025, the SGA level was $1,560 a month for a disabled individual. All right, now we have Section 8 housing. This is basically federally funded housing vouchers. Section 8 is funded by HUD, the U.S. Department of Housing and Urban Development, but it's locally administered by public housing authorities, which are called PHAs. You must have low income to qualify for Section 8, but the exact income amount varies. Also in California, you have to have under $100,000 of assets to qualify for Section 8. Next, we have SNAP. This stands for Supplemental Nutrition Assistance Program. It's basically where low-income individuals get help to buy food. In California, we call this CalFresh. Recipients can use an electronic card, which works like a debit card at places that sell food like grocery stores and farmers markets. Next, we have SNF, which stands for Skilled Nursing Facility. But when somebody says this, they actually don't usually say SNF, they call it SNF. This is usually the same thing as a nursing home. To qualify for a skilled nursing facility, you must be unable to perform your ADLs. Medicare will often pay up to the first 100 days of a stay at a SNF as long as you're getting better. Then Medi-Cal can pay for an extended nursing home stay if you qualify. Next, we have share of cost. Under Medi-Cal, you usually get free healthcare services. But if your income goes above a certain amount, which is about $1,800 a month in 2025, you have to pay some of your medical costs out of pocket. This is called share of cost. And once share of cost is triggered, the recipient has to pay all of their income past a maintenance need amount, which is currently set at just $600. It's nothing. SSDI stands for Social Security Disability Insurance. This is an income stream administered by the Social Security Administration for disabled individuals. This is where someone paid into the system while they were working, and then they're entitled to an income stream based on their work record. They don't look at your assets or your passive income, but you're only allowed to earn a certain amount per month to continue to receive your SSDI. And once you receive SSDI for 2 years and 5 months, you can start receiving Medicare. Next is SSI. This stands for Supplemental Security Income. This guarantees an income of about $1,200 a month in California. To qualify, Social Security Administration must have determined that you are disabled, and you have to have under $2,000 of countable assets. And if you're receiving any other income, that will decrease your SSI payment. Next, we have a third-party special needs trust. This is a trust where somebody puts money into a trust for a disabled individual, and that individual as the beneficiary can continue to receive their public benefits. Anyone can put money into this type of the trust instead of the disabled person themselves or that disabled person's spouse. And there's no recovery claim upon the beneficiary's death. Those are a lot of acronyms, but hopefully that was a helpful review. If you or your family are trying to navigate these programs, it's really important to get the right advice and help. Our team focuses on complex estate planning and special needs planning, although we don't advise on public benefits planning. Usually our clients come in and they already have their public benefits situated. If our office can help you with your estate planning or special needs planning, please reach out to us.
If this video is helpful for you, share it to someone else who might benefit from it.